Good morning everyone. Quite a lot to go through today. Going to start off with the reasons and examples why when we're using stops we do it on a closing basis. In the modern algorithmic world there can be a lot of things that happen intraday that then get reversed as the algos pick off a load of stops and then reverse it back the other way, and we had some examples of that yesterday. We also had the Fed coming, so when something happens before then, we still need to see what the market reaction is going to be to what is a reasonably big event. So I'm going to start off with the pound. It's been a position, we've got a short position and negative on it. We can see that we held 126.38, this is basis the futures, earlier on in the week, and we could move up towards the 128 level. We popped above it, having got this spike here, which was more pronounced in some other markets, and then when the Fed came out it reversed back down again, and then this morning we've taken out the support at 127.24, which means that we can go back down and try and attack this 126.38 level. It's a reasonably powerful support because it's a 720 minute support point. And do the euro. Now this was a little bit easier because we had a major resistance zone up around 112.94. We spiked up into it in a big way, then had a massive reversal. We sort of held the support overnight, and now this morning we are breaking down. So on a short-term basis, the pressure is on. Conversely, on the dollar index, we've done the opposite. Tried to break the final support, reversed back up again, and now this morning again we're just taking out that final resistance, which is opening up some space. Probably the most extreme example was on silver. Talked yesterday about if we took out 16.99, this level here, then it could open up a bit of a short covering binge, and that's what happened. Ahead of the Fed, came into this zone that was topped out around 17.30, and then we reversed back down, sort of held it, and now we're just hovering above the final short-term support point at 16.83. So we have been negative on silver, no change there. Gold, as it turned out, along with the euro, pretty much topped out at the final resistance point almost perfectly. We had that spike right to the level 1284, came all the way back down to the other side, bounced a little bit, and now our reference point is 1259. Jeremy talked about some bigger levels. I think it's 1252 on the higher time frames charts. So once again, a similar story to silver, close to final short-term support and then can break down again. Moving on to indexes, the E-mini S&P mentioned that final point 24.43.5. We stopped one tick below it, I think, if I just check. Yep, 43.25. So we didn't get there wasn't a spike as such like there was in some of the other markets. We've drifted back down. We held 24.25 3/4. We've got 24.16 3/4, and again Jeremy's mentioned a bigger level that's a little bit lower down. So index is a little bit under pressure. If I do the Nasdaq, that was a different story. Again, we didn't really get the spike. We didn't follow through once we took out this 57.68 point. Our line in the sand, 56.43 1/4. That's a half day or 720 minute chart. So that's a pretty important point. So there's some firm references on indexes. I'll do the Dow. I like to do the futures and the cash. We said that it was pretty much at all-time highs, wasn't it? And there wasn't anything in the way as such. it's nowhere near as negative as the other two. What is interesting is 120, I think 240 and 720 resistance has moved to the top, so that's become a powerful level. Really got to take out 226 to open up some space. If I do the cash, you can see where this lack of 24 hours a day overnight movement is still got us above. At the moment obviously it would open quite a bit below, but there's some decent support, albeit a few hundred points away. Do the Russell just so we get a complete picture. And the Russell, which is overall by and large been the weakest market over the last few months out of the four, has taken out the final short-term support this morning, so that one's under pressure. Europe is also under pressure, so we had the start with the DAX. Now the DAX looked like it was breaking up. If you look at it at that point there, I'm going to show you a daily chart in a moment which shows that it actually was going into a daily resistance. Everything's moved to the top, and effectively by the close yesterday had left space below, so we have this something we're always very interested in, is when there's a sort of dearth of levels, and so there's nothing there until 12,662, which is another 50 or 60 lower. If I do the Euro stocks, that has taken out the final support. Again, not been performing anywhere near as well as the DAX, so short term no support. Ideal bearish scenario sees us bounce back up to that 35.24 and then fail again and resume the pressure. Lastly, the FTSE came up to this major resistance zone yesterday, failed once again, so that's the second failure there. Been very much under pressure this morning, taken out that support, so again 74.59 is pretty important if we do get a bounce. But as you can see, Europe has broken final short-term supports, dollar index has broken resistances, euro has broken supports, so there's a few things marrying up there. I'm going to quickly show you the daily charts just so you can get the bigger picture. So on the E-mini, some resistances have moved to the top, first time since that breakout in mid-May. Moving on to the Nasdaq, what's interesting today is that we're getting one of our extreme signals. So this one says week up previous. This is when we've moved beyond all those range relativity levels, and then we're closing, we're trying to close back below the weekly levels. So we have to wait till tomorrow for that to be confirmed. It's actually flirting with that level right at the moment, which is why it's just disappeared again. 55, 59 effectively weekly support, so that's pretty important for this market. Start closing below there, especially tomorrow, we get this idea of a huge amount of space. I wouldn't expect it to go all the way down to there without at least stopping a few times on the way, and it could also build support based on its own momentum. But there is some space there. I do the Dow future. As you can see, nowhere near as negative. It is trying to build a time continuation sell, but no resistance has moved to the top. Go to the DAX. This is where I'm going to show you this final level. So while it appeared price was trying to break up on the intraday, we didn't actually close above that final resistance. We closed just below it, and again, interestingly, it's trying to build another sell today. We've got 12,662, which I think is very close to that intraday level, if not exactly the same point. Do the Euro stocks. We can see the breakdown in intraday, and then on the daily chart it's actually pretty clear as well. I can sort of draw a little sort of line through here, and it's taking out the final daily support, which once again is opening up space. So European equities looking somewhat precarious. If I do the FTSE, had the breakout a while ago, is under pressure today. 73.75 weekly support, so that's a very important level. Going to do the Australian market, much more Jeremy's world than mine. Extended higher yesterday, and at the moment is just sort of hanging in there, so have to wait and see on that one, but that was a powerful buy signal. Going to quickly go to FANG, although I shouldn't really type in FANG, should I? Just to see where we are there. I will update the intraday levels before the opening on the FANG channel. So Amazon, we had that big down day, held above the weekly, a little bit in no man's land on the daily chart. If I do Google, that held a daily level. Again, not much to say there. We'll do Apple, which I did do something on yesterday. Apple is by far the most interesting out of those big ones. We've got this 142.80 level, which is also an intraday level, and then after that 138.62, which is weekly. But again, that one's doing worse than the others, as it were. Do Netflix, which held the weekly level on the spike down, had a bit of a bounce. It's pretty critical. 148. Let's get it right. 148.31. Finally, Facebook, daily resistance has moved to the top. Got a minor level at 144.56 below. Nothing major for quite a long way away. I did a lot of updates on sectors and some hot stocks, which you can view on the channels. I won't go through all of them here, but probably the most interesting one was the Dow Jones Transportation. So there's an ETF, IYT. What I'm really interested in is the fact that the monthly moved to the top. That had obviously been there for a long time, and we had a sell signal which we took a while ago. We got the buyback. Hindsight's a wonderful thing. Probably should have got long down there because it was a bullwhip signal at the weekly support. We've extended all the way back up again, and now we've had a UFO and a time continuation sell. It is a little bit away from the monthly resistance, but it's giving us a negative, so it's on our watch list. If I do the actual index, so the Dow Jones Transports itself, it's almost an identical chart. So because it's an index, it doesn't necessarily have as many lines as an ETF would, because there's no volume as such. Had the same signals come up, the monthly's gone to the top, and then we've had the negatives yesterday. However, if I do XTN, which is another version or another ETF on transportations, got a different sort of chart. The signals have ended up being the same, although this one did break that final support but wasn't confirmed by the other two. We've moved up and we've come up towards a weekly line at 55.15, which is much closer, and obviously you can see that this one is underperforming. So one of our views generally is buy the strongest, sell the weakest. So if you had to take a choice about being negative of transportations and the one that you wanted to do, XTN is the one to pick, because it is the one that's underperforming the most. Move on to oil. This is one of the energy sector ETFs. There's lots of them. The thing I'm going to highlight here is had a bounce, people rotated out of the short oil, long tech. We moved down and we held the monthly support. I looked at some of the other oil ETFs and they've all done a pretty similar thing. The one that we have a position in though is Conoco, COP. The thing I want to show you here is what is fairly obvious is the overperformance of this oil stock in relationship to the ETFs. Held the monthly and weekly level, gapped higher, reversed back down. Now what I really, in an ideal situation, we have what's called a 5-day rule on gaps. It is more applicable to futures and foreign exchange where we redefine data. But I did a lot of work on gap analysis many years ago, and there's some definite patterns and rules there. And one of the rules is that once a gap has stayed for more than 5 days, then you remove it from your analysis. It is no longer a magnet where price can look to go back to, whether it's up or down. The theory behind that is short-term traders can't remember more than 5 days back, and some of us can't even remember more than 2 or 3 days back. It looks like the market's obviously going to gap lower today, which would open up the possibility of what's called an island reversal. Now, island reversals on futures and some markets is very significant. Island reversals at stocks are far more common, and so it's not as powerful a pattern. So we'll have to see how this stock performs. The other thing you've got to remember is, if we move on to crude itself, we've got this final energy and expansion base level at 44.08, so we're pretty close to it. Going to be watching that to see whether that can hold the market. Jeremy's talked about some other levels a little bit lower down that if they're broken would open up some downside. If I go to the intraday chart, we moved up into the stats yesterday, broke back down. We've formed some what I'd call minor support because it's 240 minute, but we've got that 44.08 level, which is what we're really Right, move on to bond markets. Repeatedly talked about this 156.10 on T-bonds. We got very close. I think the high was 0.5. We did reverse intraday quite a bit back down, and then it's bounced back up again. 156.10 is still the key level above. If I was to look at some of the other parts of the curve, completely different picture. Yeah, so the 10-year note gave us a buy as a continuation. We're reversing back down a little bit this morning. I would imagine the 5-year is doing something similar. So ideally, bonds being my favourite market, what I would like to see is the T-bonds confirm the buy signals in the other part of the curve. So the 5-year note gave a buy, not a particularly powerful one. I need T-bonds to close above 156.10, and then I can say that the whole part of the curve can move again, as it is sort of holding fire, as it were. Some of the core traders have been long bond markets for some time. They have taken some profits, but at the moment we're far from breaking down. This is the ultra bonds, so really long term, and again a buy as a continuation, a little bit of reaction. So look at the huge amount of space there, 190.13. So that's best part of $25,000 on a one lot if we went all the way back up there. So need T-bonds to do the job. We go to Europe. Bunds, a little bit under pressure this morning, although we did manage to close above 160, I think it's 165.11. However, that move was after hours. Europe is effectively closed. It's not really the cash market, so that sort of moved with the Fed, as it were. And so is it for real? Well, at the moment, it's telling us that it's not for real because we're back below that 65.11 point. And if we look at the shorter end of the curve, well, if I do bobbles, which is the 5-year, that's taken out the nearest support this morning. So the short end of the curve is actually underperforming the long end of the curve. do gilt. Had a surge higher yesterday, and these are bear cage signals. I'll just put the study on there, the time average band, just to explain to you what it is. What's happening is price is going above the fourth deviation higher, and then it's closing back below the third, and that's what's giving that signal. Now, when you put the study on there, the time average bands can give different setups, as it were. I like to think of this as an alternative to Bollinger Bands. The real difference is the fact it's not interested in close to close, it's interested in range. So as range expands, that's what makes those bands go up or down. This average in the middle is also variable, so depending on the range, it can be anything from a 3-period to a 21-period average, so they're far more dynamic. So if we get an expansion of range, the average comes down. If we contract, the average goes up. And this is why you get these condensing points. So at the moment, it's giving us another bear cage signal. So keeping a close eye on that. If I remove the study, no resistance has moved to the top, it's all below. So having a close eye on it, but it's not really there yet. Finally, grains. Wheat, talked about it breaking up, it sort of reversed a bit into the close. We're still miles away from this key monthly level, so just a little bit of white noise at the moment. Similar story on corn, bit of rain in the forecast, it's drifting back, but really it's drifting back into this condensed area here. Obviously it has to get back above 384.5 to get the whole thing going. It failed there yesterday at 385, so again the pressure's a little bit on. But on corn, we're definitely in this for the long haul. That's why we've got those options on corn for December, so that we don't get too spooked by any volatility. There's still another 5-6 weeks of weather to go, so plenty of time yet. Just do beans, just to complete the picture. Had a bullwhip signal, but not at support. We're now coming back down to this major monthly level, so 926 basis July, pretty important. Ideally want to hold above there on a closing basis and open up the upside once more. Other ones, I think we talked about sugar yesterday, which have broken down. Sort of reversed a little bit into the close, but still a down day, and it's weak today. Okay, I think that's about it. A bit long today. That's what happens when there's a lot going on.